In today's market update, we're going to be taking a look at several markets around the world and discussing a turning point that is approaching in those markets. Before we do that, I must ask you to please make sure that you have read and understood these disclaimers. Let's start with the S&P 500. This is SPX data, and this is the analysis that we've been looking at in recent market updates. We have the important trough in October of last year, which could be a trough of 18-month magnitude as shown in this analysis here, or it might only be a trough of 40-week magnitude, and I've discussed that in recent market updates. According to our analysis of the S&P 500, we have an 80-day cycle trough that has occurred in early January of this year. I mentioned in last week's market update, I think it was, an interesting comment that I received about the different markets around the world, and that's why we're going to be taking a look at the slight variation in the analysis that we see in those other markets, whereby the 80-day cycle trough is better phased in about the middle of January. Recently, we have been discussing the position of the 40-day cycle trough, and if we zoom in here, you can see in a little more detail the way in which price has recently been finding support at the level of the 20-day cycle FLD. You will notice that it found very accurate support over here at the end of January, and I have discussed this as a possible position for the 40-day cycle trough. But notice how last week on Tuesday, price came down to the 20-day cycle FLD, tapped it, and then bounced straight back up again. In our analysis, we have our nest of lows for the 40-day cycle trough below this potential trough that formed last week, and so it seems likely that that 40-day cycle trough might in fact be better placed over here. Of course, Sentient Trader has not yet positioned the diamonds because of the fact that it needs some confirmation of the fact that a trough has formed before it will actually position those diamonds. And so at the moment we are asking ourselves whether the 40-day cycle trough came in slightly early at 26 days or came in slightly late at 39 days. The average length of a 40-day cycle is 34 days, pretty much directly in between those two troughs. Remember that these cycles are dynamic. Their wavelengths are constantly changing, but the average wavelength of a 40-day cycle over many, many years has been 34 days. In last week's market update video, I discussed the fact that the S&P 500 needs to turn down into the 80-day cycle trough, which we are expecting sometime in March. When price tapped the 20-day cycle FLD on Tuesday, of course, we were interested to know whether price was going to manage to get below it, but it failed to do so. And so we do not yet have confirmation of the fact that price is on its way down towards the 80-day cycle trough. But of course, it must do that fairly soon. And you will notice that today, and this is after hours price action, today is in fact a public holiday in the United States. So if you're in the US, I hope that you're enjoying President's Day. It's also a public holiday in Canada. So if you're in Canada, I hope you're enjoying Family Day. So the North American markets are quiet today, but you can see the 20-day cycle FLD is reaching right up to the level of price during this week. And it certainly looks as if though price might be on the point of crossing down below this 20-day cycle FLD. That would make it a potential F category interaction. An F category interaction usually gives us a good short trading opportunity. However, given the recent bullishness of this market, how good a short trading opportunity this will be is debatable. If we take a look at our sequence of interactions, we have a good clean A category interaction over here. We have a BC type interaction over here where price finds support at the level of the FLD. It did so according to this analysis at the time of the 10-day cycle trough. We then had another BC category interaction. Double BC category interactions are fairly common. If the 40-day cycle trough did occur last week on Tuesday, which does seem likely, then our D and E category interactions were an unusual pair of interactions where price found support at the level of the FLD. Usually, we would expect price to cross down below the FLD, generate a target to the downside, reach that target, often very accurately, and then bounce back up again. So what happens when the D and E category interactions combine into a pair and price finds support at the level of the FLD? All that means is that there is an excess of bullish influence in the market at the time. And so bearing in mind the fact that there is still clearly evidence of bullish influence in this market, our F category interaction is next, where price is expected to turn down and move towards the next 80-day cycle trough. That trough, of course, must also be a 20-week cycle trough, so it's a fairly important one. And so the turn that is approaching in the S&P 500 is for the formation of a peak of the 20-week cycle. The other primary cycle tool that Hurst defined 50 years ago is the VTL, or valid trend line. This is a trend line that joins two troughs or two peaks, and it obeys a few simple rules that validate it in cycle terms. This is the VTL for the 80-day cycle. The VTL must be plotted between two consecutive troughs of the same cycle, in this case the 80-day cycle. But here you will find that the 80-day cycle trough has been phased at this position over here, whereas the VTL has actually been displaced slightly and has been drawn to touch that point over there. This is an interesting detail in the way in which Sentient Trader plots the VTLs. I'm not going to go into it in depth here, but I would like to point out the fact that we have already observed the fact that the 80-day cycle trough might be better positioned at this later point in the middle of January. And that's why we're going to be taking a look at some other markets from around the world today to discuss this possibility. In last week's market update, I pointed out the fact that price found support at the level of the 80-day cycle FLD in the middle of January. Again, increasing the chances that this trough over here was in fact the 80-day cycle trough and not this earlier trough at the beginning of January. Now, the important point about the VTL is that when price crosses down below this 80-day cycle VTL, we will have confirmation that the peak of the next longer cycle, in other words, the 20-week cycle, has formed in the market. And that is the turn that we are anticipating. We are anticipating the fact that the 20-week cycle must form a peak. Price must then turn down and continue down into the 80-day cycle trough, which will also, of course, be a 20-week cycle trough. We have been looking at that trough occurring early in March, but notice how these nests of lows are getting squeezed out to the right-hand edge of the chart. If we join these circles that must of course be synchronized, you will notice that we have a sloping line to the right, indicating that it is likely that this trough is going to come in later in March as opposed to earlier. And so the 80-day cycle VTL is definitely one to watch for confirmation that the 20-week cycle peak has formed. Taking a quick look at the Nasdaq, you can see our analysis is a little more elegant on this chart, if you like. We have neater nests of lows. Here is the 40-day cycle nest of lows, which is arranged beneath last week's price action. Again, it is very possible that the 40-day cycle trough formed on Tuesday of last week in the Nasdaq. Here is our nest of lows for the 20-week cycle trough, still lying ahead of us. And as you can see, the 20-week cycle trough nest of lows is centered in about the third week of March. Here is that same 80-day cycle VTL, which reaches between this trough in October of last year and this trough over here at the beginning of January. We don't have the discrepancy in the Nasdaq with the displaced trough over here in the third week of January. And price, as you can see, if we zoom in, is right now at about the level of the 80-day cycle VTL. And so again, we are going to be watching for signs that the 20-week cycle peak has been confirmed in the Nasdaq and the price is on its way down into the 20-week cycle trough. Displaying the 20-day cycle FLD, you can see that by default, as it were, price has crossed down below the 20-day cycle FLD in a potential F category interaction. But of course, that is not yet confirmed because the Nasdaq is also, of course, on holiday today. Now let's jump across the oceans and take a look at the German DAX. You can see that this market also has an 18-month cycle trough phased in October of last year. Again, that is a debatable phasing. It could be either 18-month or 40 weeks, but we're not going to go through that argument again. The important thing here has to do with the positioning of the 80-day cycle trough. There it is, fairly obvious in price, and you can see that it is in the third week of January of this year, as opposed to the first week of January that we saw in the US markets. The interesting thing about the DAX is that we have a very clean 40-day cycle nest of lows, which is pretty much centered on the weekend that has just passed. And so again, Tuesday's price action provides us with a very likely position for the 40-day cycle trough. Here we have a neat nest of lows also for the 80-day cycle trough, which is also expected in the third or fourth week of March. Notice the displaced circle for the 20-week cycle. The reason for that is because of having positioned the 18-month cycle trough in October of last year, we have compressed the cycles in the analysis. The shorter cycles are not reflecting that compression because of the number of waves that we count back in order to calculate the recent wavelength of each cycle. And so the 80-day cycle has been stretching back to its normal length again, but the 20-week cycle is still showing signs of compression. It's important to bear in mind that we do not know that that compression is still in fact occurring now. It is much more likely that it is simply a relic of the past, if you like, because of the fact that the shorter cycles have started stretching out again. In this kind of situation, we tend to disregard this floating circle and whiskers and rather focus on the consolidated nest of lows formed by the shorter cycles. Taking a look at the same 80-day cycle VTL on the DAX chart, you can see that price is right now at about the level of that 80-day VTL, and it is threatening potentially to cross it at some point fairly soon. Again, when price crosses down below the 80-day cycle VTL, that will be confirmation that the peak of the 20-week cycle has formed, which means that the turn that we are anticipating has occurred, and we are looking at price moving down into the 20-week cycle trough expected towards the end of March. Traveling further around the world, here is the Australian stock market, the ASX index, and here you can see we also have an 18-month cycle trough phased in October of last year. Again, we have the same debate about 18 months or 40 weeks. The important thing is that this trough that occurred in the third week of January is almost certainly the trough of the 80-day cycle. Here we have a neat nest of lows for the 40-day cycle, which potentially also in the Australian markets occurred on Tuesday of last week. Again, we have a nest of lows for the 20-week cycle in the third or fourth week of March. And so we have exactly the same situation in the Australian market, where we are expecting a peak of the 20-week cycle to occur next, and then of course price is expected to move down into the next 20-week cycle trough. And here again is that 80-day cycle VTL. It's a very clean VTL on the Australian market. As you can see, price came down and just tapped that VTL last week on Tuesday. There are some Hurst cycles analysts that take that tap of the VTL as evidence that in fact the peak has formed. However, I find that generally it is useful to wait for a clean cross below the VTL. I would be looking for price to not only cross below the VTL, but also to close below that VTL, and preferably also for median price to cross down below the VTL before taking that as confirmation that the 20-week cycle peak has formed. However, the message in the Australian market is exactly the same as in all the other markets we've looked at, which is that a 20-week cycle peak is expected, and then we are looking at price moving down into the 20-week cycle trough. Let's take a very quick look at gold, and an interesting thing has happened in gold. We have a 20-week cycle trough in early October of last year. Our 80-day cycle trough in gold formed in about the middle of December. Here you can see an interesting and very staggered nest of lows for the 20-week cycle trough. Notice how the 20-week cycle, the 80-day cycle, and the 40-day cycle circles are pretty much lined up over this position over here, providing us with a partial nest of lows that was definitely focused on last week. But then we have a disconnection with the rest of the nest of lows, which is the 20-day cycle and shorter, which is still lying ahead of us. The reason for that is because the software has struggled to position a convincing 20-day cycle trough within this period of time here. But the takeaway is fairly obvious. We are expecting a 20-week cycle trough round about now. Disregarding the shorter phasing, in other words from the 20-day cycle and shorter, it seems very possible that this 20-day cycle trough formed in gold on Wednesday of last week. It's an interesting thing that we are expecting a 20-week cycle peak in stock markets, and it seems very possible that a 20-week cycle trough has formed in gold. There is not a direct inverse correlation between the price movements of stock markets and gold. That is a myth, and we're not going to be delving into that in today's video. But it is interesting that occasionally one does see troughs in gold occurring when peaks occur in the market. And so it is certainly time to sit up and pay attention to gold and the possibility that a 20-week cycle trough has formed. If we zoom in on this price action a little bit, you can see that price is now approaching the 20-day cycle FLD. If the 20-week cycle trough has formed, we would expect price to cross above the 20-day cycle FLD and then generate a target to the upside for the first move for the bounce out of that 20-week cycle trough. Finally, a very quick look at Bitcoin, because we're looking at an important turn happening in other markets. Is the same important turn happening in Bitcoin? In my opinion, it isn't yet. We have a very clean cycle action that has played out in Bitcoin recently, following the trough on the 23rd of January, which you can see I have phased here as a 20-week cycle trough. Price crossed up above the 20-day cycle FLD in an A category interaction. It then found almost perfect support at the level of the 20-day cycle FLD at the time that the 20-day cycle trough was forming. That is, of course, a BC category interaction pair, and that is a textbook example of what we expect out of our interactions between price and the FLD. What is expected next is, of course, for a 40-day cycle trough to form, and you can see that 40-day cycle nest of lows is pretty much upon us at the moment. It is quite possible that that 40-day cycle trough actually occurred well up above the 20-day cycle FLD. How is that possible, you might ask? Surely price must come down below the 20-day cycle FLD. There is no rule saying that it should. If it forms above the level of the 20-day cycle FLD, that simply reveals the excess bullish influence that is present in this market. And so, although it is possible that price will come down and cross below the 20-day cycle FLD and form a late 40-day cycle trough, we are seeing no signs of bearishness yet in Bitcoin. And so the important turning point that we're expecting in the stock markets, and we have potentially just experienced in gold, is not evident in Bitcoin. I hope you found this market update useful and interesting. If you have any questions, please put them in the comments below the video or join us on our Hurst Cycles Discord server. I look forward to hearing from you.